We have Joseph Anantharaju, Executive Vice Chairman and Chief Executive Officer, Product Engineering Services at Happiest Minds, and Venkatraman Narayanan, Managing Director and Chief Financial Officer at the company, joining in for a quick chat. Thank you very much, both of you, for being with us here. Prashant this side. Mr. Narayanan, if I can start by sort of putting to you what we heard from Wipro just a day ago, which is the fact that they're withholding their variable pay to employees for now. We were talking to an analyst post this on this news item, and he was saying that Wipro usually has a signaling effect, what will follow at other IT services firms. What is your opinion, sir? Are we likely to see this spread, this kind of thing, across IT companies?
First, I would like to say that it seems to be a policy decision, because variable pay, the subject that we're discussing at Wipro, is linked to certain performance metrics. So I'm sure there would have been a policy, a document which has been published ahead of time, shared with the people, saying how they could earn their variable pay, because it's actually performance linked. Performance, both personnel, team, and the company. So there seems to be some variations on that. And that's how I read the news as, which they have said that they would be paying X% of the variable pay, given that there are certain utilization targets which have been set, and upon meeting them, they will get the variable pay. So that's the way I read it. So where I'm going from is these are all company-specific policies, but at the same time, you could see some trends from it, saying that there could be some ahead of time hiring that could have happened, which is what we are reading in the news today at certain companies. And how is that going to play out in the next couple of quarters? Because slowly the supply situation is slowly stabilizing. I think I did stick my neck out a couple of quarters back, saying that hopefully that should start stabilizing in a couple of quarters. And we are seeing very early signals, but not so much on the digital side, but nevertheless, we are seeing it on the IT side. So it could be a mixture of these factors that's led to this news, Prashant.
So, I mean, job growth, the supply imbalance will be corrected, but at this point, you don't think this is primarily driven by excess supply or anything of that sort, right? Or growth weakening, or growth prospects weakening, more people on the bench, that kind of thing?
It could be a slight term correction. See, until now, for the last 3 quarters, the question that I was being asked is, your utilization is high, why are you not getting adequate number of people? We can only do as much. Now you ramp up the entire machinery, post that you get in people. There's a lead lag effect, and there are some adjustments that have to happen at the structural level. That's what is happening, is my take on it. But we'll get to know as we progress during the quarter, Prashant.
Okay. Joseph Anantharaju, who's the Executive Vice Chairman and Chief Executive Officer, Product Engineering Services, also with us. Joseph, hi, good morning. Welcome to the show. I wanted to understand some demand trends, amidst all this talk about a soft landing and impending recession. You had increased your revenue guidance for FY23 to 25%. You've also targeted to grow at a compounded growth of 25% over the next 5 years. Are you seeing higher organic growth, or is it M&A related growth which has prompted you to make this kind of aggressive guidance? I'm asking because this is a time when perhaps client spends could slow down given the impending recession. Joseph, I think you're on mute.
Sorry about that.
Yes, go ahead.
So if you look at the growth that projection that we provided of 25%, we've not really broken it up into organic and inorganic. We expect that from both of these sources, we'll be able to do 25%. But getting into the market condition, as I had stated the previous time we spoke, we still have not seen any major signs of slowdown or budgets being pulled back. And our experience and discussions with customers have indicated that the demand continues to be strong. What customers are doing is taking a close look at their various initiatives and the projects that they're starting, and looking at where they're going to get more bang for their buck, and maybe a little bit early, and where it has more impact on their customers. And they're prioritizing those projects or initiatives first. So it's more of a matter of moving money around, and this way they can keep they can prioritize their projects, and if something goes wrong, they still have the ability to change. But so far, we've not, apart from some seasonal trends. If you see edutech, typically the June to July, August timeframe is where they take a breather, because back to school, they would have just pushed out all their software and products out. So some of the seasonal trends that we are seeing, but outside of that, we've not seen any major pullback in spend, and that gave us the confidence to have our guidance at 25%.
So your this 25% guidance for FY23, can you tell us what would be the contribution organically and how much would come from inorganic growth?
Sonia, the way to look at this is this $1 billion number was put out by us the last year after our IPO. So that was a number. And then we had also gone to the market saying that we were looking at a 20% organic growth for the next 4 to 5 years. And then maybe 15% kind of a number. But to reach $1 billion, you then do the math, it becomes very clear that you need to do acquisitions. So there was this organic growth, inorganic growth, two components coming into play to make sure that we had a consistent message, simple enough for everybody to follow. We said, let's work backwards. To reach $1 billion, you need to grow 25%. Now, most of it will come organic. There will be an element which will come inorganic, but we'll take it by the year. So that's the fundamental philosophy for our 25% number, Sonia. Now, if you look at FY23, I've finished first quarter. I've shown 30% growth, 27, 28% growth. And now I've got 3 more quarters. If you look at it, we have not announced any acquisitions, while we are looking at quite a few names and quite actively looking at them, more so even the start after the performance that we have given in the first quarter. So if you look at it, for the next 9 months, our growth will be pretty much largely organic. And there could be, if we are able to close a deal by the second, third, or fourth quarter, we could get a small element of inorganic growth baked into it. But FY25 would be largely organic, is what I should say. Organic plus a very small element of inorganic if everything goes well on the acquisition front.
Sorry, no. So you perhaps will close this acquisition by when?
No. We are looking to close it at the earliest. We don't have anything out there, but we're consistently on the lookout for companies.
This calendar year?
Keeping our fingers crossed on that.
Okay. And I hope we are the first to hear about it when the acquisition does happen.
Sure.
All right. Well, Joseph and Venkatraman, thanks a lot for joining in.